Right, so you guys are in for a treat today. I'm not just breaking down one trade, I'm breaking down two, back to back. Why? Simply because both of these trades are related to each other. The first trade got me funded. The second trade was profit that I got on the funded account. Let me go ahead and break down these trades, alright? Now for context, as you guys know, once upon a time, I was actually funded 400k with Quanteco. Over the span of a couple months, I lost all of my funding with them simply because of the fact that I just blew their accounts. I broke a couple rules, and when it comes down to it, when you break a rule, you have to face the consequences. And in my case, I lost my accounts. That being said, I've been working very vigorously to get these accounts back. And this trade that I'm about to break down for you is a trade that got one of those accounts back. So this trade basically passed my 200k Quanteco prime evaluation, and it actually got me funded. And the trade that I'm going to break down after that is the trade that actually took on the live funded account that got me $4,000. But that's beside the point for now. Let's focus on this first trade, alright? Now before I break down the first trade, as you can see right here, this was the profits for the trade itself. $10,000, a 1-to-5 risk reward ratio. Not a normal 1-to-2 that I normally do, and I'll explain why. And this right here is the 200k QT prime 2-step funded certificate that I received as a result of passing the account. Now let's go ahead and break this trade down. Now this trade was taken on the 17th of March 2025 on a Monday. It's not the usual setup that I take during this specific time, but I saw lower time frame confluences and I took the trade. So obviously this trade was taken on a Monday, and on that Sunday I went ahead and marked out this daily high right here. So this right here was my area that I was expecting some sort of reversal from. Now in the AM session of New York, we didn't actually go ahead and take out that high. Instead, we took it out in the PM session. Now, as you guys know, in the PM session, I trade off the AM high, AM low, lunch high, and lunch low. But in this scenario, I took it off the daily high. Why? Let's have a look. So I had this marked out on Sunday when I was doing my weekly bias breakdown, okay? So obviously, I was anticipating a reversal from here. Now, dropping down to the 5-minute time frame, we did in fact take out that daily high in the PM session. We didn't have an AM high sweep or a lunch high sweep or a lunch low sweep or a AM low sweep. Instead, we took out this daily high. Now, from this daily high, obviously, you jump down to the lower time frames, and as you can see right here, we had our market structure shift. So this market structure shift occurred. Now obviously some of you guys might say this is negligible market structure shift, but obviously for me it was enough. We had this market structure shift. We had a fair value gap. We had displacement, strong candles toward the downside, and this fair value gap is what I would have marked out if I was on the charts at the time. Now obviously I wasn't on the charts at the time. I actually came just before I saw this entry. By the time I jumped on the charts, I saw that the market had already tapped into this fair value gap. It had rallied down towards the downside just a little bit, and then it's come back towards the entry. Now this time I'm on the desk, I'm on my charts, and I see an opportunity to think, okay, cool, let's go ahead and take this entry, let's go ahead and take this risk and enter this trade. So this could simply just be a retracement back to the entry, or even potentially into the smaller fair value gap right here, which we did actually react off of, and then potentially a push towards the downside. So once we came back to entry, I basically thought, cool, let me go ahead and enter. I manually entered this trade, risking 1%. Stop loss was of course at the high, and take profit would have been at a 1-to-2 risk to reward ratio, but I didn't hold it to a 1-to-2 risk to reward ratio. I held it to a 1-to-5. Why? Because this was an evaluation, and I tried to pass these evaluations as fast as possible. So in this scenario, I went to the 15-minute time frame, and I marked out potential areas where the market could be magnetized towards. So obviously right here we have in fact one 15-minute fair value gap, and over here we have another 15-minute fair value gap. Now obviously once I saw the market disperse straight through this 15-minute fair value gap, I was confident that we're going to go ahead and reach this 15-minute fair value gap, hence why I held my trade all the way to a 1-to-5 risk reward ratio right there, and I got out of that trade, sniper exit just before the market started to reverse and New York session closed for the day. If you check this on the 1-minute time frame, we could have easily just reacted off of this 15-minute and started just pushing towards the upside, but once I saw that strong displacement and I saw the market going ahead and pushing past it, I was confident that we're going to go ahead and reach towards this area over here. And of course we do have this 1-minute area of liquidity right here just above the 15-minute fair value gap, so that in itself was a potential target. And as you can see, I got out of this trade just before it started to reverse, just before. So just to confirm, we had PM session, we had a daily high sweep in the PM session, we had market structure shift, fair value gap, displacement, entry at the fair value gap, stop loss was at the high, and take profit was at internal liquidity at the 15-minute fair value gap below. That is all you need, and with that trade we passed the evaluation. So yeah, that trade I was risking 1%. We hit a 1-to-5 risk to reward ratio, and I managed to pass my QT 200k prime evaluation with this one trade. So this trade got me funded. Now let's talk about the trade that made me $4,000 on the funded account that I got as a result of this trade. Now just before I go through this trade, this is the profits for that specific trade right here. As you can see, 3,781, just about a 1-to-2 risk to reward ratio. It was a late entry for me personally, but at the end of the day it did hit TP, so let's go ahead and break this down, okay? So this trade was taken on the 25th of March 2025 on a Tuesday. This was taken on Nasdaq US 100. Very similar thing. This was in the AM session. On Sunday, I marked out this 4-hour fair value gap right here, which I expected the market to go ahead and reach towards, and then also marked out this daily high right here within the 4-hour fair value gap that I expected the market to go ahead and have a reaction off of. So this right here was where I was looking to see a potential reversal from, and as you can see on Tuesday, we did in fact get that short-term reversal. Dropping down to the 1-minute time frame. Now once the daily high got swept, we had this inversion fair value gap right here. We've got 1, 2, 3 candles fair value gap, and then we had the market market go ahead and invert this area right here, this fair value gap, and the market tapped into this inversion fair value gap and started pushing towards the downside. We then had a retracement towards the entry right here and actually entered. We've got 1, 2, 3 candles fair value gap, and then we had the market go ahead and invert this area right here, this fair value gap, which we then could have potentially taken our entry off of. Now obviously I didn't want to take this entry straight away because there wasn't any market structure shift, so I just stayed out. But then I saw the market go back to the entry and I thought, we've just taken out a daily high, we've got inversion fair value gap, we've gone ahead and tapped into that, we've pushed towards the downside, we've retraced into the inversion fair value gap. You could potentially see some downwards momentum. So I didn't enter straight away. I waited, and I saw these candles right here getting printed, and I thought, you know what, let me take the risk. I entered manually right here, stop loss was at the high, and my take profit was of course at 1 to 2 risk to reward ratio, and that trade eventually hit TP. So yeah, just to recap on this second trade, daily high got swept within a 4-hour fair value gap. We had an inversion fair value gap. We had the market go ahead and tap into the inversion and push toward the downside. We retraced. After I saw the retracement, I waited a bit just to see what the market would do, just to see if there was any further confirmations to go ahead and take an entry. I manually entered once I saw a couple of bearish candles. My stop loss was at the high and my take profit was at 1 to 2 risk reward ratio. So yeah, I hope that was beneficial to you guys and you guys managed to understand something and you can potentially implement this within your own trading. I'm going to take one more trade on this account just so I can complete the 2 minimum trading days, making 0.5% to make me eligible to be qualified for this payout. So yeah, we'll see how that goes. And if you guys are interested in Quanteco, they are currently doing a massive discount right now. You can go ahead and use this code right here for 50% off, maybe 40% off, but I'm pretty sure it's 50% off. You'll have to double check. I've personally done around $75,000 in payouts with them. They do pay out. They've been good to me. They've been good to my community. They've been good to a lot of traders that I know. This isn't me vouching for them. I'm simply talking about my experience. But yeah, I hope you guys enjoyed that video and I'll see you guys in the next one.